Good day all, Ira Epstein, and we are now with your metal market update, and this update is for Tuesday, the 4th of January, 2022, just getting on to 5:25 p.m. Central Time. Now, before I go anywhere, I'm holding a live webinar this coming Thursday. The time is 12:30 p.m. Central Time. It is free to get into it if you didn't get an email from me, and that went out a while ago. Just take your cursor, move it up to the top here. You'll see an icon appear. Click on it. That gets you in, fill out your information, and away you go. Once you get in, if you have any questions for me, there's an email link there. Click on it. Write me what you want me to cover. It could be futures, it could be stock market, it could be spiders, ETFs. I'll try to cover them. Okay, so as we look at the stock market down, is this the end of the Santa Claus rally? Well, Santa Claus may have left the building. All right, the Dow is up, but everything else came down fairly hard, and that hardness just might be the point where that euphoria for that talk is run its course. And as I said, it's often the second trading day, according to Yale Hirsch of the Stock Traders Almanac, that runs its course. At the same time, we saw the gold market certainly perk up. Copper market did a hell of a job today, coming right back at you. The dollar was up a little bit. Currencies were sort of wobbling back and forth. And we hit again on the downside. Remember, we're up in the evening, so we're up a little bit tonight. The bonds and the notes as interest rates continue to climb. So when we take a look at gold, you can see that you're staying over the 18-week average of closes, which is a filter. Just gives me a bullish bias. This doesn't say on the weekly chart if it's bullish or bearish. We now go to the daily chart. And on the dailies, you can see this action, and it all clears up, at least for me, when I put a swing line on the chart. What a swing line does, it's a study I wrote, probably 20 some odd years ago. And I really don't share it with other charting services. I'm not interested in the legacy of that. To make a long story short, it looks at 5 variables on the current day to the days just prior to it, to the exact day prior to it, or if you're on a 5-minute chart, to the exact bar prior to it. Doesn't matter the time length. And on those, it determines, do you have a line that's drawn to the high or the low? So it looks at outside days, inside days, higher high days, lower and low days. It puts all those together, and that draws it. And what I'm looking for is a pattern. Because if I come back here, I've done this a long time, 52 years. I don't see the pattern there. I see the pattern immediately. Higher lows, higher highs. The market's in an uptrend on that simple concept. I then filter that with moving averages. Yesterday, and we should get here, here's the market on Monday. Market's coming down. I said I would be surprised if the pros don't nibble into the long side here. Stops under that low. They've got to defend themselves. What did the market do? It jumped back today, as you can see, went into those numbers, and this is where you're at right now. So what's happening is the market has still got this as a key number. Now, if the high of yesterday, which was 1817.20, is taken out, then my swing line is going to change. It'll move up to this low, and that's the number I don't want taken out. If that's taken out, you could start a pattern of lower highs, lower lows under these averages, which would not be friendly to the gold market in any manner. When I put the Bollinger Band on, each time we have recently gotten up to the Bollinger Band, the market has failed. That doesn't mean you haven't carved out higher highs as the band is going up. That's the way that it's supposed to work. So the trend is up. We have at this point the bias up, since the market bias is determined, again, just like I showed you on the first chart, where is price in relation to a key moving average? On this chart, it's the 18-day average. That, to me, is the key. So that gives me that part up. So next I move, where's momentum? And momentum stinks. You have momentum slipping down, if anything, in an overbought area, not going with the market and saying, just like it did here, I want to move up in momentum, I want to move up in price. You're not getting that. The gold-silver ratio is sort of floundering here, but because the market is under the 18-day moving average of closes, it means silver is gaining on gold. Why? The lower the numbers go, the fewer ounces of silver. In a perfect world where you put it in your shopping basket, you roll it down the street to your coin person or whoever, and you say, hey, I'm going to give you 78.61 ounces of silver. Could I have an ounce of gold? And he goes, of course, lad, you can have that ounce of gold. When you look at the silver chart, you don't have the nice uptrend pattern that you did in the gold, though. You have a higher high and a lower low pattern that was set here. Like the gold, the momentum is pointing down. So next I get to the copper market. And while the trend of the market is down, it has the most powerful signal it can get. You embedded the slow stochastics. When the two numbers that make up the slow stochastic are sitting over 80 together, if they do it several days or more in a row, they're said to be by me that they've embedded. They have changed themselves from being a market that is overbought to locking in an uptrend. That overrides whatever the swing line is doing. It says to me, at least, that on pullbacks, the pros are buyers target the closest upper Bollinger Band, obviously, or a window envelope. Okay, I don't show you window envelopes here. That is what I do in my paid subscriber area, and that's something you might want to consider because it's a key tool. In the platinum, you're in a downtrend, in an overbought condition with the bias up. There's nothing that I see that makes sense there. In the palladium market, after this break, as you could see, where you had an embedded reading, you lose it. Prices often, when it's lost, go back to the 18-day average to regroup. And that's exactly what I see going on in this market. And last, in the dollar index, no trend. Caught in the width of the Bollinger Band with patterns of a higher high, a lower low, got oversold, giving you a bounce, not doing a heck of a lot. And that tells me that regardless of what all these TV people know, oh, the dollar's going up this year, blah, blah, the market doesn't know that. It's not buying into that story at all. There is no trend. You're just going sideways at this point in time. So I want to remind you the importance. Thursday, bring your questions. It's a 20-minute webinar. Clear your lunchtime. Do whatever you've got to do. All you need to do is click up here. The icon will appear. Sign up, and I will see you at that webinar. I open at 12:15, the webinar. I test everything, make sure it's all working right. Generally it is. We do not record it and post it anywhere. You either attend it or you don't see it. I'm Ira Epstein. You have a good day.